I don't know how else to put this quarter. The stock is under a lot of pressure. Maybe we can go through this line by line. How much pressure is your business under right now?
Yeah. Hey, thanks, Sazi. Always a pleasure to chat with you. The quarter, we landed the top line within the range we said. We had the challenges with the China export, but the big news, of course, was the bottom line. And for that, it was very much, hey, we accelerated the AI PC, and that had lower margins as we moved into our next factory to accelerate the ramp of it, which was negative. And obviously some other one-time things that we referenced as well. But it was much more the outlook, where it was a weaker outlook as well, as we expect some of those challenges to persist. And we made a major announcement about our structuring changes as we look to the future. So overall, a lot of great product and process milestones. I'll say phase one of the journey, it's just stunning what we've been able to accomplish. And now time to take pretty aggressive steps on the financially sustainable model for Intel for the future. And that's what we've rolled out. We're very committed to the journey that we're on.
So with this video, what we're going to be doing is we're going to be looking at a recent interview with Intel CEO Pat Gelsinger. Most of the people that follow the stock are probably well aware of the fact that the most recent earnings report that came from Intel Corporation really shocked the market. And there were several surprises in this report, which probably should have been telegraphed a bit better and a bit more in advance so that the market would have had a bit more time to prepare for some of the news releases and surprises that were about to unfold. Overall, what I really think that people should be asking themselves here is whether or not Pat Gelsinger should remain in his position as CEO of Intel. There are some real questions that need to be asked here. So what we're going to be looking at in this video is how exactly he responds to some very tough questions about the company's operational performances during the most recent quarter and in the likely quarters ahead.
What surprised you on the cost front as you went through the quarter?
Well, clearly, as we made this decision to move into our Ireland factory from our TD factory, had quite a large negative impact on our margins from where we indicated at the beginning of the quarter. This is the right thing to do, get into the production factory, accelerate the volume ramp of our AI PC components, but it was a surprise. And that and some of our own operational things, as we said, this new operating model, Intel Foundry, Intel products, we're not mature yet, and we're making the steps necessary, to mature that rapidly. And overall, as we'd say, the market was a little bit softer. Some of our cyclical businesses taking a bit longer to recovery. Some of the inventory digestion that we spoke about as well in areas like our client business. So I'll say all of those put together, moderated our outlook. And we're taking the steps for a more sustainably, financially effective Intel for the future. This is the biggest restructuring of Intel, I'd say, since the memory microprocessor decision 4 decades ago. We laid out the new operating model, and we're taking decisive steps to execute on the process and product work that we've done to now combine it with an operating model to make us effective for the long term.
So for the question relating to the surprises and costs that were developing during the most recent quarter, most of the attention here seems to be focused on softness in external markets, external factors, demand issues, negative impact due to moving into the Ireland factory. He says that there was a negative impact for Intel as far as the margins were concerned. Overall, he still thinks that this is a positive move, given that this will allow Intel to accelerate the volume ramp for production for its AI PC components. So overall, it's clear here that his position is that the Intel Foundry is still in the early phases of its maturation. The real question here, though, is whether or not this was properly telegraphed to the market. Were investors really made aware of these issues beforehand, or was this a surprise for him as well? Because if that's the case, it does seem to me that there are some legitimate issues here, some real questions about whether or not he has made mistakes in his operational capacities. Overall here, the real question is whether or not they really are taking the proper steps to achieve a more sustainable future for Intel. Is this course of action really setting the company on a positive path that's sustainable both for the company and for investors?
Pat, this is challenging stuff. This has to test every leadership principle you've learned over decades of doing this.
Well, anytime I have to go to my Intel family and say, sorry, we have to take steps to reduce our headcount, that is challenging. And we're going to do that with respect and dignity, because many of these are, just people that are so committed to the success of Intel. And we also realize we have to combine, that heart with making the decisions to make a healthy Intel for the long term. That's the most important thing that we've done. This is a unique company, a company that truly bends physics and chemistry in ways that are, barely seen possible until we've made it commonplace. And we now have to have this new operating model, Intel Products and Intel Foundry, for sustainable financial results that allow us to continue to execute that extraordinary vision, for decades to come. That's the tough steps that we're rolling out. And yeah, it's a challenging period, but this is what I signed up for and committed, to do with this leadership team.
So what he's alluding to here is the part of the earnings report, the earnings release, where we learned that Intel is going to be laying off more than 15,000 workers. What they're describing this as would be work positions that are related to non-essential work. In some sense, I do feel that this number or this headline is being overblown a bit, because I would actually agree with the fact that Intel was a bit bloated as far as its workforce was concerned. They really did need to lay off some people. They did have too many people on their workforce in ways that were above average relative to the broader market, relative to the technology sector. This was sort of an event that needed to take place. So in many cases, when you do hear about massive layoffs like this, it definitely is perceived as, a major red flag or a major warning signal for a company. But this is actually one area of the earnings report that I'm not alarmed by. I don't think this is a huge problem, because I did think that Intel was a bit bloated as far as its workforce was concerned.
The third quarter outlook too, below consensus as well. What don't you see getting better quarter over quarter?
Overall, we see the market recovering more slowly than what we indicated at the beginning of the year. All of our cyclical businesses see improvement, but less so. And we've seen that in the auto industry, the FPGA business. Each one of them are recovering more slowly. We have some inventory in the client business that we have to work through. The data center business remains primarily driven by the AI build out. So the CPU portion, the Xeon portion of that is more modest. So I'll say everything is moving a bit more slowly in the second half of the year than we would have indicated earlier. But the overall trends, we see more positive in the fourth quarter. We see slightly above, normal growth rates in the fourth quarter. And clearly, as we go into next year, things like corporate refresh, AI PC accelerate, our product lines are stronger and our new AI accelerators start to ramp more effectively. So we're still optimistic for the long term, but we realize that the second half of the year, a bit more challenged than we would have indicated.
So this question mostly relates to the guidance figures that were posted for the third quarter outlook. This also was below market expectations. Intel is forecasting weaker performances for the third quarter than they were previously revealing to the market. So the explanation here that he's giving us is that the market is recovering slowly. Cyclical businesses are recovering slowly. For the most part, this is really a wait and see type of environment. And he really does expect investors to remain somewhat patient for improvements that are likely to develop during the fourth quarter period. So overall, it really remains to be seen whether or not investors will wait this long and maintain their long positions in this stock during all of that time period. And these are real questions, given the fact that, we have already been surprised here. A lot of these changes in the expectation were not being telegraphed to investors previously. At this stage, I really do think that it should be more of a question about whether or not his position is on the chopping block. If we're gonna start to make the company leaner and start to remove unnecessary positions from the company, why aren't we considering his position being open for discussion? Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.